Market believes that inflation is on the downtrend, but we are witnessing basically a game of chicken between the economy, the markets, and the Fed right now. US stocks and treasuries slumped. Federal Reserve hammered with that something that will become persistent in their fight against inflation. So we are warned of more pain supposedly to come, albeit some assets looks as they don't care, and among them there are commodities. Today I would like to put commodities in a limelight in order to discuss with you whether it's a good or bad time to invest in the type of asset, and we'll jump right over to lumber, that is possibly in one of an interesting place in terms of technicals and fundamentals. So let's begin. So we are starting over with economy view. Let's have a look at what we got out there. So on economy view, I have for you the news that recently been of a much importance. So US mortgage rates drop below 7% in biggest decline since July. So what does it mean? So for every single investor in a housing market, that seems like possible revert in this negative tendency of rising mortgage rates that literally during recent time has pushing off the type of clients from taking credits. So right now we can find that the housing market, at least in the short medium term, is rebounding, and we can find right now that the housing market, even if deteriorated rapidly this year, right now Federal Reserve, even if tightening monetary policy to help reduce inflation, the market, as I said, is betting on a slowdown of that figures. That's why we can find that some of elements of the housing market may possibly rebound, at least for now. We'll get back to this article right after, but right now let's jump to market movers, and on the market movers section let's have a look what we got out there. Let's jump for this week, and this week was packed with many different events. There were plenty of them even yesterday, and we had exactly housing starts, building permits. Let's remind this one. So this one is in a downtrend, but with other components as housing starts, that's supposed to rebound in a short medium term, as those gauges are not looking that bad for now. So building permits are somewhere between the post-pandemic levels, where we might find the bottom, where we were just back before this V-shape chart representation. So we can find that if we getting back to normal after this fiscal stimulus phase of the market, where these conditions were anomalous, right now we might find a possible bottom. So this will also weigh on lumber prices. About I will talk within a second. But right now, let's get back to trading economics, and we had also initial jobless claims. Let's have a look at labor market. Right here, it's still at stable levels, that not finding any type of ominous signs. So on Friday we had retail sales out of the Great Britain, and also unexpectedly it rising to levels not seen this year. So the sentiment is improving, especially taking in consideration that that's October and November usually, as well as December usually, the phase where those customers are turning up and just having a rush to the stores, as that's Santa rally already began. So that's retail sales that's improving the moods. For now, existing home sales from US will get published today at 11 a.m. So that's how it looks from a trading economics standpoint. So right now, as we got it through, I would like to jump you to trade idea right now, but that will be an extended trade idea, as I want you to look through with me different type of assets of that market of commodities. So let's jump straight to let's jump straight to a trading view. What we got over there. So DXY right now is slandering and finding a possible bottom right around 105 and 106 area. So that's possibly the area where the DXY may revert from, but for now we can find kind of a strong tendencies on commodity markets that may persist for longer in terms of the trends that they've already showcased. So let's get to first, that is a commodity index. Right now we have a breakout out of this important for us downtrend line, where this boost right over may prompt us back to the levels of 126 been seen back in the second half of August. As October and November are usually the good time for the market, I do expect those levels might get tested. Getting back to AW1 and another, the brother of AW1, that's DBA Invesco DB Agriculture Fund. We can find right now that we are also trying to rebound out of these levels been found in the second half of October, and that's quite possible that after this I would say rounding formation will rebound and having another rally back to the levels of 2079 that also been marked in August and September by this index. In terms of I would say an energetic commodity, USD WTI, we are commenting this relatively often, that right now is in a downtrend. We also taken a bet right around this level, so it's around 10% again for those of you that decided to sell it at this point. If you tracked the target as I've objected, that was around $83. We have even slumped further, and this downward movement is still remaining until possibly the bottom will be found, and somewhere around 76-77 bucks. In terms of natural gas, we are also in reverse. I do expect for this to retest these levels. Without this, I want to expect natural gas to find as a possible trade idea. In terms of USD WTI to NG1 right now, so oil to natural gas right now, the market conditions are putting in favor natural gas a bit more. In terms of gold miners ETF, we are right now trying to get through the recent resistance marked in August, but that might be difficult as we've built that bearish candle right at the top that may become a bearish premise for the future performance. So let's have a look at silver. Silver right now is rebounding out of this recent highs, have been marked relatively consecutively in August and September and October, yes, and there is a chance we'll hang on here before further rebound. Let's switch to the full screen. Platinum to US dollar right now is showing that after this rally forward, we are taking a breath in order to take another breath out. After breathing in, and another breath in supposed to get us even higher, but it depends on how much of this bearish candle will get marked. If this candle will cover half of this green, that means that the engulfing pattern should bring those valuations even lower. So it's once again platinum. In terms of XME metals and mining ETF, we are right now still at the high levels, but those high levels may get stopped by those recent highs been marked on August, where this chart has decelerated at the levels of 51, 52. In terms of global uranium ETF, we are still holding this triangle and marking out this horizontal trend. So for now, we can find that that's not many happening on URA, but it's the dominant power on the market is becoming the bearish side, as those bounces are lower and lower with the time being. Cameco, I will skip it as it's URA, also uranium. Zinc is defending this level of 260, 261, 262, and we'll find out whether there is enough strength to get through the recent highs of October. In terms of aluminium, let's have a look. In terms of aluminium, we can find that aluminium futures trying to build another strength to the upside, but for now it would be rather selling on strength, more likely scenario, rather than buying, as this resistance seems strong. Let's have a look at nickel, but this market has been turned off recently as poor liquidity has hit this asset. That's why I won't comment this, but definitely there is a demand for this asset for now. But will we manage to get through this resistance? That's highly doubtable. But I would steer clear out of this market, especially of liquidity reasons. What we got there? Lead. That's the market that's trying to break out of this triangle, but I would say that we have broken a market structure by dropping that much. Right now we are trying to recover, but it will be very, very difficult. But definitely after rising over this 186 barrier, that will be a sign of a return of bulls for longer, and making another rally forward, as we can find that wasn't right here such of an overheat that will possibly bring those valuations lower. Right now, after this rebound been set on July, we may find that there might be another power to build it even further. Copper, what we have on the copper side, we had a major spring that brought those valuations around 4 units on the copper futures on COMEX, but right now we are eventually getting back to the valuations of this consolidation. That means that possibly this rally is over yet. And length lumber futures. I do find this lumber futures as an interesting market, as we've recently have built this double bottom formation. We are forming a consolidation and a pennant pattern that brought us higher to the levels of 441, and in a 4-hour standpoint we can find this rounding bottom formation is pretty clear that we are trying to form another wave of growth. On a daily horizon, let's have a look. We had the bottom back in June of 2020 that supposed to be held if we would be still able to return for better housing days. As I mentioned, mortgage rates are dropping, so kind of a relief on this market, relief for bears might be noticed. I do expect the LBS1 to return to at least, if we take the Fibonacci extension, to around those levels at least. That's still around 3.6% of a growth, but it's still a kind of a target of minimum, but because we are forming kind of a bottoming formation, I would expect the LBS to go to at least those levels of 473, where the kind of a major resistance should be found. So for me, if I just have a look at positioning on this market, we can find that commercials have been buying the lumber recently like mad during this time of the bottoming. We can find that since 25th of July, this bottoming has pushed more and more interested into this market. So right now we can find that there is a slump in this positioning, but we may find that this double bottom formation are expected to bring the valuations possibly higher. Also, we can find that recently, since the second half of October, those positioning is also increasing. So the mood on this market is improving, and that's why I would find that this target of around 491 is not off the mark. So in terms of trading idea, if I put long position right here, there will be a risk-reward ratio at the level of 3.98, so it's close to 4. That's very decent, but I would wait for a possible reverse right here to those highs of recently. So for me, even more attractive bet would be for LBS to move back to this 436, and with this I do expect the lumber to form kind of a reversal pattern that will brought the valuations higher abruptly after. So I would expect this price to linger somewhere between 435 and 441, and if the price will exceed any of those boundaries, I would expect I wouldn't find this proposition of a trade as being valid, as this price would run away too far to the upside. Okay, so that's my point on LBS. Let's have a look at other commodities quickly. On coffee futures, I don't find any of a specific occasion right now, so I would skip this one. Cocoa futures also, that's still in a very long persisting consolidation. That's this market is really boring, but we are returning to the levels above this boundary of the large triangle, so that might be a possible catalyst for the further growth. But right now it's too hard to say where that may end. On cotton, that's interesting, as we can find that we are breaking to the downside. That's even that's a very high likelihood we will get bring down to the levels back of 78 on cotton. So I would track this commodity very carefully. This consolidation is literally bored with this fake outs, so the further move might be within hours or days. Sugar is, after this very nice spike, selling off, and there are supposed to be occasions if we close this gap at the levels of 20s. In terms of wheat is still a boring market. After this slide, I would expect further drop to the levels that might be found on a monthly average, so around 620 and 650s around. Let's have a look at corn. Corn right now is still high, as long as the oil is high as well, as those markets are highly correlated. Right now we might expect to close the gap, otherwise there will be further sell-off. In terms of oat futures, we may find that we are forming kind of a bottoming formation, and another rally upwards is highly expected after the type of a sell-off. That also might be seen on the RSI, that we are trying to form kind of a bottoming, and the rally might be also to happen this or next month. On orange juice, that's very volatile market, so I would find it as the one for the professionalists that are really know what they're doing. Right now we are rebounding out of this highs of June and April, but it's very difficult whether we'll be in the power to push the valuation stronger. But in terms of hitting the ceiling, we still have some room ahead, and 12 to 15% should be reached. Rice futures, that's also the one on a monthly standpoint that may move a bit higher, but I would say that alpha for this trade right now is not very positive, as we are awaiting correction. In terms of live cattle, that's also consolidation on a on the highs, and there might be also an attack on those highs of 2014. In terms of lean hogs futures, we can find it right now that there is not much of a trend, as this very volatile and not liquid market, so I would rather skip it for now. And we are ending up with soybean. Soybean futures right now are consolidating within the area of 1360ish, and 1470-ish. In terms of coal, India, we are setting off, and that might be the end. That might be the end of this rally. But if we just have a look at the monthly horizon, there might be an appetite for high evaluations. But for now, it looks like we are done. So today, that was an episode that I wanted to get you more familiar with commodities, with what's happening on the commodity market. That's also bringing some opportunities, especially in terms of lumber, that I'm counting on to rebound in some extent. So that's what I want to make you to notice, that also you need to take care of the spreads that on the market, especially on the lumber market, as it's not very liquid one, might be huge. So better buy and wait for the occasions when the market is in the reverse. That might be easier for you to buy. That's why corrections are the best times to enter the positions. So in today's episode, that's it. Thank you very much for watching. Let me know whether you had any questions in the chat. So we haven't asked anything, but if you like to pose a question after this live transmission, you may do it right below the video in the depicted space. So thank you, have a nice weekend, and see you on Monday, 8:45 East time.